welcome. This is ET Now and you're watching News Now with me, Snehi Shah. Now let's move straight to the market updates globally as well as back at home. Wall Street saw a good Thursday after data showed that weekly jobless claims increased more than expected. This indicates that the labor market conditions are loosening up a little bit. Markets also celebrated easing inflation concerns as US CPI hit a 2-year low. Back home, the Nifty ended the truncated week in the green for the third week in a row above the 17,800 levels. This was largely led by stellar rally in real estate and auto stocks. The IT sector, however, capped overall gains. But the big story of the day, a dismal fourth quarter show from tech giant Infosys. Its revenue declined 3.2% in constant currency terms, while revenue guidance came in at 4 to 7% for FY24. My colleague Anisha Jain is here to share all the details from the company's Q4 results. Hi Anisha.
Infosys has missed the FY23 guidance with a growth of 15.4% versus the guidance of 16.5% due to the big disappointment coming in on the top line front in the quarter gone by. A constant currency revenue decline of 3.2%. That compares with the street expectation of 0.6% growth and a growth by TCS which was reported close to that figure as well. So a big disappointment coming in from TCS. As far as the top line is concerned, the management attributed that to one-time impact coming in on account of project cancellations as well as slower ramp-ups and delayed ramp-ups that we saw in verticals of telecom, high-tech as well as retail, as well as they are seeing some weakness in mortgage and insurance, the BFSI verticals that they had called out earlier as well, and investment banking too is a bit of a slowdown as well. The FY24 guidance is rather tepid. They're expecting a growth of 4 to 7% only, and that compares with the street estimate of 6 to 8%. Nobody on the street was expecting a lower range of the guidance to be at 4%, so that's the big disappointment. And similarly, the disappointment coming in on the margin guidance front as well, which is standing at 20 to 22%. The street was expecting a number of 21 to 23%, so a big disappointment coming in there as well. The only silver lining, if at all, is one, that the deal win continues to be steady at $2.1 billion, plus the comment coming in from Salil Parekh talking about that they have the largest pipeline of deals that they have seen in a long time, and also the fact that they're seeing some stabilization in the month of March, but the demand remains uncertain, and that's the reason they're not able to call out when the recovery will happen. They want to keep the guidance a bit tepid to give them the leeway available for any room on the upside, and they are talking about levers available on the margin front as well. But so far, a very disappointing set number coming in from Infosys, and the expectation is that there's going to be an EPS cut coming in of 5 to 10%, and we'll see a sharp decline coming in on the stock price when it opens on Monday.
All right, thanks Anisha for that roundup. That's a roundup of the Infosys Q4 numbers, slightly disappointing results coming there. But let's also listen into the top bosses at Infosys on the company's Q4 results.
In Q4, we saw changes in the market environment. During the quarter, we saw unplanned project ramp downs in some of our clients and delays in decision making, which resulted in lower volumes. In addition, we had some one-time revenue impact. While we saw some signs of stabilization in March, the environment remains uncertain. This led to our Q4 year-on-year growth of 8.8% in constant currency and quarter-on-quarter decline of 3.2%. Our operating margin was resilient at 21% for the quarter. We had $2.1 billion in large deals in the quarter.
Also listen in to the word coming in from Deepan Mehta, Director at Elixir Equities on Infosys, and what the stock price could do on Monday.
For the time being, I think it's best to stay away from the sector. The time to sell certainly is gone because the way the correction has taken place. And maybe, a couple of quarters more, the pain will be there and there could be a recovery soon thereafter. I think knee-jerk reaction on Monday will be a sell-off in Infy and other IT stocks. No denying that, no getting away from that, frankly.
So that was the word coming in on Infosys on the Q4 results. But let's also listen into the word coming in from the TCS management, which believes that global uncertainties, TCS is still aspiring for double-digit growth despite all these uncertainties in FY24. So let's listen in.
So, Samir, while we can judge the numbers by saying that, okay, it was the slowest quarterly growth in last 10 quarters, margins were under pressure despite the currency tailwind. One thing is clear if I summarize by saying the next 2 or 3 quarters would be hard to call given the macro dynamism. Will that be a fair assessment?
Yes, given the uncertainty, we would believe that we'll have to play it one step at a time rather than taking a forward view on it.
And it will be tough to get double-digit growth in FY24.
No, I would still aspire to get to double digit. Depends on how it plays out.
So that was it from the top brass at TCS. But let's keep it with the Q4 earnings. And HDFC Bank is set to report its Q4 results on Saturday. Harsh joins in with what the street is expecting. Harsh, what's the word?
Well, yes, HDFC will kickstart the banking earnings for Q4. We're expecting net interest income to expand a solid 25% on year-on-year basis. 23,500 crore is where that number is expected to come at. A healthy clip with regard to the way in which loans have also grown, 17%. They've disclosed that particular number in their business update. Moving quickly on to operating profit, though operating profit not growing as fast as probably the net interest income, and that's on the back of good OPEX that HDFC continues to push out. Because of the number of branches that they are opening, 1400 plus branches in this particular year is what they've already pushed out, and therefore your operating profit will come in 19,500 crores odd, and it'll expand by around 19.5% on a year-on-year basis. We're also expecting provisions to see a bit of an uptick when I'm looking at it sequentially. 3,000 crore is where that will come at versus the 2,800 crore Q3 of FY23. And therefore, we'll see profit after tax also largely in line. 19% higher is where we'll see profit after tax. Around that 12,000 crore mark is where we anticipate to see that. Now, in terms of disclosures, they've already told us deposit growth has been extremely strong, 21%, 1.5 lakh crore of deposits completely mobilized in this particular quarter. What a stellar quarter it's been in terms of that particular metric for HDFC Bank. The other piece, of course, to look out for is one is credit cards. The second is margins. Mind you, where do margins move from here as the deposits start getting mobilized is a key question. And the other piece that also one would have to look out for is how quickly is the merger now going to go through, because that 23 lakh crore book is what we will get to see, I don't know, maybe in Q1 of the next year.
Thanks a lot, Harsh, for that. That's what the street is penciling in for HDFC Bank's Q4 results, all set to be declared on Saturday. But Q4 earnings have started coming in full force. A mixed basket of companies are set to report earnings next week, ranging from IT to insurance names from the likes of HCL Tech, Cyient, ICICI Lombard, and more. My colleague Ashesha is joining in with what you can expect from these companies on their Q4 numbers.
Well, yes, large cap IT companies, the likes of Infosys and TCS reported their numbers next week, but now we have a whole host of companies that will be reporting their numbers next week. Let's start off with one of those nifty companies, HCL Tech, where seasonal decline in HCL Tech software is expected to impact numbers this quarter. As far as margins are concerned, HCL Tech margins are expected to contract by about 150 basis points on a quarter-on-quarter basis. Growth in IT services, meanwhile, is expected to remain strong. Commentary on FY24 guidance, attrition, deal pipeline will be the key monitorable to watch out for as far as HCL Tech numbers are concerned. Let's also talk about some other non-nifty companies then. We have a whole host of life insurance companies that will be reporting their numbers. First up, ICICI Lombard, where claim ratios and expense ratios are expected to inch higher this quarter. Combined ratio, meanwhile, is expected to be under pressure on the back of higher loss and expense ratios. Moving on to ICICI Prudential Life, then over here, new business premium growth is expected to remain robust, while VNB growth and margins are expected to remain healthy. Commentary about growth outlook will be the key to watch out for as far as this insurance player is concerned. Let's also talk about some other companies, and Angel One will be one of those companies which will be reporting their numbers. Gross client additions improved this quarter. F&O volumes also improved this quarter, but cost to income ratio is expected to increase on a sequential basis for Angel One. Meanwhile, Tata Communications over here, core services revenue is expected to grow by about 2% on a quarter-on-quarter basis, and we are expecting improved deal pipelines, which is expected to aid revenues for Tata Communications this quarter. Lastly, let's also talk about some other mid-cap IT companies which will be reporting the numbers next week, the likes of Cyient and Mastech. Cyient in particular is expected to report 50 basis point quarter-on-quarter improvement as far as margins are concerned, while on a constant currency terms, Revenue growth is expected to come in at 5.4% for Cyient. So on the back of these companies which will be reporting their numbers next week, keep an eye out on all of these stocks.
Thank you, Ashesha, and keep an eye out for all the back and stack. Thanks for staying tuned. Despite heightened volatility in the Indian equity markets, retail investors' confidence continues to be strong. Data released by the Association of Mutual Funds for the month of March showed continued rise of SIPs and inflows into the Indian equity markets. SIPs crossed the 14,000 crore mark for the first time ever. Similarly, equity inflows crossed the 20,000 crore mark compared to the 15,000 crore last year. Let's listen in to NS Venkatesh, the CEO at AMFI, on what's driving this optimism.
We see a very positive trend in SIP flows. The last year, if you see, at least around 14,000 crore has been there in the last 4 months, and now if you look at this month onwards, we will still see the 14,000 crores coming up. By the year end, we believe that at least the SIP flows should be at least at around 15,000 crore. Definitely, the Indian economy is poised to grow and do better in this financial year and the coming financial years. So essentially, Indian markets will do well. If that is a premise under which we are working, equity market will do well, because the corporate earnings are expected to be much better, which will ensure that the valuations will also go up and the equity markets will do substantially better. If that is the case, we will see the equity mutual funds grow in the years to come.
So that's the word coming in from AMFI's top brass. But let's get a move on then and see what's happening on the COVID front. India's COVID tally, unfortunately, continues to inch higher. Latest data from the Health Ministry shows that over 11,000 new cases were registered in the last 24 hours itself. Amid this spike, the Indian Medical Association is advising citizens to stick to COVID-appropriate behavior and to maintain proper hygiene. Meanwhile, mask mandate returns to Noida in all public places, including schools, colleges, offices and hospitals. Sameer Dikshit joins in with the latest updates. Hi, Sameer.
There is a steep rise in COVID cases across the country, and that has alarmed the central as well as the state government. In last 24 hours, more than 11,000 new COVID cases have been recorded. To be precise, 11,109 new COVID cases have been recorded across the country, and the total active COVID cases numbers has reached to nearly 50,000 mark. Even the daily positivity rate has crossed the 5% mark, and this is the reason that now we are seeing that states, especially where there is a steep surge in COVID cases like Delhi, Maharashtra, Gujarat, Telangana, so these states, the authorities are now coming up with new guidelines and steps to combat this COVID battle. For example, Delhi's education minister has mentioned that now detailed guidelines will be released for school children. Even Ghaziabad authority has came up and issued the directions that in schools, COVID appropriate behavior, that is to use face mask and follow the social distancing, that has to be followed. Even the court, the hospitals, they have made the COVID appropriate behavior mandatory. In addition to this, we have also seen that the central government has been constantly appealing that the situation is such that one needs not to panic about, but yes, they have to remain alert. Citizens have to remain alert and follow the COVID appropriate behavior. The only sigh of relief amid all these numbers is that the hospitalization rate has not gone through up. So the health ministry has mentioned that the new subvariant of Omicron, it spreads quite fast, but the person need not to go to hospital. That requirement is not so much. So amid all this, we have also seen that the policy of central government, that is to test, track, treat and enhance the vaccination coverage, that has also been advised to states that they have to rigorously follow it, and the states have also been advised that if required, they can procure the COVID vaccines at their own and then they can administer it.
So that's the latest word coming in